Hello there, this is James and you're watching Tixee Live. In fact, you're watching a Tixee Live watch-along of the US gross domestic product. It tends to be sometimes a massive event and it can be a real market driver, but something I want to discuss before it comes out, which would be in about 6 minutes, is it as big as it used to be? But anyway, before we get into all of that, don't forget, these little videos are for educational purposes only and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So like I say, we're watching a Tixee Live watch-along of the US gross domestic product. Now, for those who are new to trading, let's do a brief description of what the GDP is, okay? The GDP, or gross domestic product, okay, is released by the US Bureau of Economic Analysis. And the GDP shows the monetary value of all the goods, services, and structures produced by that country. In other words, the general health of that country's economy. Now, usually, higher than expected reading could be seen as positive for the currency. Lower than expected reading could be considered negative for the currency in question. Oh, thank you very much. Hi, Jerry. Hope you're well, my friend. Thank you very much for the nice compliment. I hope you're finding these lives useful and helpful as well. I hope you're well and your family's well. Thank you. So yeah, lower than expected reading could be considered negative for the currency. Now, the expectation is for the reading to come in is negative 0.6%. The previous reading was negative 0.6%. But if we have a look over the last couple, in May, it was negative 1.5. June was negative 1.6. July was negative 0.9. And August was negative 0.6% again. So is there going to be signs that the US economy or US GDP is indeed improving? And hey to you too. How are you doing? Hope you're well. Good to see you again. So again, there was this big debate. There was a big debate. It's what leads on to what I really want to sort of talk about this event, because I try and do watch-alongs, time permitting, to the big market events I think is going to drive the market. Now, do I think this is going to be a big market driver? I think it's going to be a medium market driver, and I tell you why. Because the last time I did a watch-along, one of the best watch-alongs I did, actually, and unfortunately I had the wrong numbers at the time when it was announced, was when the US GDP came in as negative 0.9. So that was about 2 months ago. And technically, when it came in as negative 0.9, that meant the US was technically in a recession. So I think that the reading, if it comes in negative, it will start the whole technical recession debate again. Because there are those in the US, there's two parties, okay? One party thinks we're not in a recession because our labor market is still really good, which brings on to a point I want to make in a minute. They say, no, it doesn't matter about that number. Our labor market's really good. We're not in recession. The other side of the argument is saying, look, it's another negative reading. We are in a technical recession. So that will then carry on the ongoing debate whether or not the US is in recession. So we'll have that again. And I think the market will pretty much maybe ignore that sort of argument. The other thing, this is the final reading for the quarter, because usually they do an estimate, then a secondary reading, and a third reading. And the final reading can tend to have less of an impact on the market. Okay, less than an impact. I'm not saying that this won't have an impact on the market, but it can tend to have less of an impact on the market. So that's the other thing. The other thing, and I've said this many times on many videos I have done, the market tends to focus on one story at a time. And the big story at the moment, dominating the headlines other than the UK, obviously, is inflation. That is dominating everything, especially today when Germany's inflation, which was announced 28 minutes ago at 10.9%, which is shocking. Is shocking number. Okay, 10.9%. So inflation is dominating. So I don't know whether or not this will be as big as it usually is. And the other thing is, like I say, the two arguments. We're in a recession. No, we're not. Our labor market's really good. Well, technically we are, because the reading is negative again. But here's the other thing. At the same time, which I think could potentially be even bigger, is US initial claims is coming in at the same time. And that's expected to come in at 215,000. If it comes in around that level or lower, then it goes to show that the US labor market is indeed very good. So let's go through some scenarios quickly, because it's about to come out in less than 20 seconds. Scenario number one, US GDP announced as expected, negative 0.6, and the market instead focuses on the US initial claims. Scenario number two, US GDP announced lower than expected. USD potentially weakens as the market then anticipates the Fed's going to be gentle with interest rates, which they won't. Scenario three, USD GDP announced higher than expected. The US potentially rises as the market sees the Fed not holding back. And scenario number four, US GDP is announced, and no matter what the reading is, the market ignores the estimates. So anyway, it's about to come out any minute now. Let's go straight on to the euro dollar. Here we go. Let's 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 see what it is. Let's see what it is. I'll make sure I got the right site. Okay, the euro is falling a little bit, not massive action on the single currency, but let's have a look and see what it's coming. Let's see what the initial claims is as well, because I think I'm going to be more interested in that. Okie doke. Okie doke. Right. US, excuse me. US GDP, okay. Breaking news, US GDP comes in as expected at negative 0.6%. But more importantly, which I think is going to be the main thing the market's going to focus upon and actually have a reaction when the US opens, US initial claims. Get ready for this. Get ready for this. Huh. Right. The Fed's not going to be gentle, by the way. Anybody who thinks the Fed's going to be gentle, it's not true. US initial claims. Expectation, 215,000. Actual number of initial claims, 193,000. So a lot lower than anticipated. A lot lower than anticipated. A lot lower. A lot lower than anticipated. So they have a very good labor market. The market reaction? That's a question. I think the majority of central banks hopes for scenario two, just to let them have a breathing space. Yeah, like I say, at the moment, what was scenario two? I've forgotten. I've been caught up in the numbers. What was scenario two? Lower than expected. No, well, like I say, it's the same. Yeah, scenario two was this. That's not happened. It's basically this scenario. And like I say, the market has not really focused on it because it was expected. So that was the outcome. So it's scenario one at the moment. But anyway, that initial claims number, which is really good, is really good. So yes, they do have a very strong job market. Let's have a quick look at what the continuous jobless claims was as well. Give me a second and I'll share that with you as well. So let's have a quick look at that. Let's have a quick look at that as well. My trusty mobile, can't go anywhere without it, especially when you're in trading. So continuous. Let's have a look, see what that was like, what that came in at. Bear with me, ladies and gents. Bear with me. Okay. Continue, here we go. Come on. Refresh. Give me a second. It's interesting to see what the continuous. And then we have a quick look to see how the markets. Let's have a quick look as I'm looking for that. Let's have a look and see what gold reacted to. Slightly stronger dollar, pretty limp, and the euro again was under pressure anyway before the announcement. So the sterling, which has been in the headlines as well, it couldn't break that level. It's now come under the same amount of pressure again as previous as well. So that was the continuous. Anyway, again, continuous jobless claims. Finally found it. Thank you for your patience, everybody. That also came in lower, 1.347K. So that's in lower than expected as well. So they got a good labor market. But anyway, let's have we'll have a chat about that in a minute. But let's have a quick look, see what's going on. Like I say, sterling again slightly under pressure. No real change from what happened before the announcement. Currently trading at 1.850. Can't break this potential key level of 10870. Euro pretty much the same. I think it's really, to be honest, I think the German inflation reading at 10.9 is a shocker on that. Let's look at the S&P 500. Okay, slightly lower on the back of that. Again, I think this is more driven by the initial claims. I think it's more driven by that. Reason why I say it, look, see, there we go. Reason why I say that is because obviously the fact that they got a good labor market gives the Fed more leg room to carry on being aggressive, which means stronger dollar, which is not good for risk assets. So this is what we have with that. Let's have a look, see how Bitcoin reacted as well. Again, slightly risk-off attitude on the back of that as well. So, there we go. I think it's more focused on the initial claims. I really, really do. So, like I said, I'm going through this scenario one, the first scenario we spoke about. This is how the market is reacting for now. Let's see how the US reacts in just under an hour's time. But here we go. I mean, that's the thing to me. That is the thing to me, because a little while back, I used to do quite a few videos on the US initial claims. And I used to say that, and I used to call it a canary in the coal mine. I used to refer to US initial claims as, a canary on the coal mine. It's like an early warning system to showing that, as soon as initial claims stop to rise, then you're heading in a direction which is not good for the labor market. But that labor market is performing really well at the moment. And again, like I said, the Fed keeps saying the labor market can handle these aggressive interest rate hikes. And clearly, this is going to give them more fuel. So what I expect in the US session, like I may say, at the moment, we've got dollar strength, slightly risk-off attitude as well. So this may potentially continue in the US. Let's see how the US reacts in just over an hour's time. Don't forget, you can obviously ask questions anytime you want, or basically show me your opinion. What do you think? What's your opinion on this? Like I say, let's have a quick look and see. Obviously, the Bitcoin's under pressure now as well. S&P, that's under pressure. Euro is as well. So again, we've got the dollar strength. Let's look at the dollar yen actually. Slightly. Again, it's still trading around that upper trend line. I think they're going to try and push. How's gold doing? That's a good question. I think gold is under pressure. We got dollar strength again, which if we look on the 30 minutes, we can see more dramatic. You see, gold is under pressure on the back of that. It's more than initial claims. I'm sure of it. I'm sure it's the initial claims. It's giving us dollar strength on that. That's where gold is at the moment. $1,648. I'm sure it's because of more of the initial claims. But please share me your guys' opinions. Tell me what you think. I think obviously the UK GDP tomorrow, that's going to be slightly bigger as well. I really do. Okay, not a problem. Not a problem. If you think of a question later, you can put it in the comment section either on Facebook or YouTube. I will see them and I will reply to them next time I'm live on air, which will be roughly in an hour and 20 minutes time to cover the US session. And that would be interesting, that episode, because there's quite a few things which have happened and come out. Unfortunately, I will be talking about the UK again, because that is a lot of headline news at the moment. But it'd be interesting to see how the US session opens on the back of this information and how it digests it. So please come and join me for that. If there is no other questions, not a problem. Not a problem. Don't forget, if you're watching me on Facebook, by all means, give us a follow. If you're watching me on YouTube and you've liked this little video, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video, found it useful, interesting, and you put up with me, my over-the-top enthusiasm for the markets, which I simply cannot help because I love the markets, then give me one of these. I can see I've got quite a few likes already, which I really, really, really appreciate. I really do. And I really appreciate all of you taking the time out to come and watch me on this watch along. So thank you as well for that. Thank you for SMF 790 for the questions. Thank you, Jerry, for the very nice compliment at the beginning of this video. I really, really appreciate it. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.